The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis, from the offices of Duke and Duke, 100 South Broad Street, Philadelphia, Pennsylvania. I hope everybody can hear me. I've heard we have a few little difficulties that they're working through, but we'll be able to see if this works out. I don't know what else is happening, but it seems to be working. I don't know what the problem would be. Let me double check here just to see if everything is good. Yeah, we're okay. Looking good, Billy Ray. Feeling good, Lewis. Starting out with this DAX chart, folks, after that three drive to a bottom was formed a few weeks ago, we've now rallied up to the 78% level. Very, very close, to it. We're, oh my gosh, just I think only about 50 points away in the DAX, so that's really not very much. So let's take a look next at the FTSE, because look at this FTSE weekly, folks. This is a real interesting chart here, and this is, I guess, related to the big wedding that happened over there. But you can see that we have this three drive to a top pattern forming. It's also a 1, 2, 3, 4, 5-point reverse pattern. This was brought out by Wells Wilder as a reverse point wave. It's also known as the T6 expanding triangle pattern in Gartley's book. I don't remember, it's between pages 215 and 229, I believe, somewhere in that ballpark, but he describes it very, very perfectly. So, but that is a expanding triangle in the FTSE. So whether that's going to be a top or not, we'll be able to see. Remember, we had that big ABCD pattern right at the bottom there, and so it's been quite bullish ever since, and now we are making new highs, almost at the 1.27 expansion. Now, we've had a request to cover December corn, but before I do that, I want to show a chart from our good friend David White here at TFNN that does the charts for TFNN. And you'll notice here, this is a bearish Gartley, and it's on the biotech index, the XBI. This is absolutely perfect, folks. We have this big move here, then we had the big move down, so that really confirms it. In other words, unless it gets above that 94.50 level, this is a very bearish, Gartley pattern. It's spot on. He even puts the volume in there, as you can see, and the rally was on a little less than historical volume. Anyway, that's one of the patterns that they have for that program. They send them out each day. Like everything else, they don't all work, but they certainly have a tendency to work quite a bit of the time, and that's the thing to really, keep an eye on for sure. Now, there's a whole bunch of things that are happening today for sure, but one of the things that we wanted to go through was to just several people about some of the trades that we've talked about here, here at TFNN, and one of them that we've hardly ever trade, and I never trade it, and that's coffee. We had that beautiful 78% level down to the downside, and you'll notice here that we've had a really nice rally here, well over 4 or 5 cents in coffee, which is $2,000, and it's closed really strong yesterday, which is really nice. But another one that we did, and we did it for everybody, and actually it's the first time I've traded sugar in well over 3 years, and it was the really nice bottoming pattern that we had in sugar down at the 1.618 expansion. We rallied up, and we bought it on the second test, the retest at the 1.618 retest, and that was right at a double bottom. And as you can see, we had the big explosive move yesterday, and that gives a profit of well over $1,100 in that. And so what we try to do is move our stop to break even, because with this really wide range like this, there's a possibility that you could get a pretty substantial move. All you have to do is to go back to June, folks. Go to the far left of the chart where you see that three drive to a bottom pattern there, and then you see that big move up. See, that move took sugar from 12 all the way up to 15. You know, that's 3 handles. If it did that, you would be going 11 all the way up to 14. That would be a $4,000 move if it happens. Now, it's not going to happen overnight, but the best part of it is you're risk-free right now. So that's what we're watching now, is this really wide-ranging bar that we have to see. That gives us a little bit of the leverage that we need, you know, to really be in a risk-free trade, and that's what we try to do, you know, when we're working on some of these things, because it makes it, you know, pretty nice to look at. Anyway, take another one here. This was the another one that we've been doing here for the 24/7. This was the soybean oil, the December soybean oil. We got down to that big ABCD pattern at that 31.20 level. We're now trading a full handle higher, and we're looking stronger today with the tariff thing for China. Looks like it's dissipating. So again, you want to move your stop to break even in the Christmas oil and Christmas soybean oil to see if it's going to hold those levels, because now you're in a risk-free trade. That's the whole situation, is to try to get to risk-free. And the reason why is because you don't know how much money you're going to make on these. You know, that's the only thing you can really control in the risk-reward equation is the amount of risk that you have to take care of, and that's what we're trying to do. So if you handle that risk, you take care of the risk, the rest of the stuff will take care of itself. You know, it really will. It'll be something that you know, you'll be able to keep an eye on anyway to make it interesting. Now, we had a request from one of our favorite people here at TFNN from old state of Washington, right near the old Oregon River. We'll put this up here. This is the Christmas corn, December corn. And as you can see, we had a nice retracement here into the full moon, the new moon, and we had a pretty good rally. We're now trading near the highs, folks. We've taken these highs out of last night. We're trading up around the 425 level right now, heading towards at least 432, which would complete that ABCD pattern. But we've been bullish corn for quite some time. You'll notice that the little notation there back on March 19th where it says look for support. That was a perfect 61% retracement of the low that we made for the contract back in January. It made a perfect 61% retracement. We rallied up, pulled down to a 78% retracement. Bada bing, bada boom. All we've been doing since that time is ratcheting higher. And I think we're going to go a lot higher in corn before it's all over. Many of the farmers had been hedging corn above $4, and now, you know, that they're 25 cents. They're still got their money. I mean, that's a good thing for them. But those that didn't hedge are making extra money. Now, what Sime Only does as Sylvius Financial is how to manage those contracts that they have those hedged on, because if they start to see the market move, what the farmers do is they move into the futures market to put on a Texas hedge. That means long the futures, long the cash. And that's what they've been doing recently, and they still look a lot higher. Again, the whole premise is to get to a break-even trade as quickly as possible, and that's what they're doing now. So now they're in the midst of planting the corn, and in southern Indiana they're having a real difficult time just because of the wet weather. But we'll watch that. We're going to take a little break here, and we get back, we talk a little bit more about some of the things you'd like to hear. And if you don't like to hear, turn the TV off. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. I posted the chart of crude oil. This is July crude oil. I hope it came up. Yes, it did. And what I'd like to do is make a little special announcement here. We're going to have a special treat for you. On Thursday, we're going to have a cameo appearance by none other than Norman. We call it like we see him, Winsky. He is going to give us his key times of the day for Friday, and he's going to be on the show Friday. And we'll be able to discuss those as we look at them. So the last time he did that, he was spot on. And, of course, we're like the restaurant business here at TFNN. As long as you serve a good meal, you're welcome back. So we're going to have Norm on Thursday for a cameo appearance, and then for his time for the full moon coming in here over the holiday weekend, of course, will be Friday. So we'll be able to take a look at that. Folks, watch this chart here today for the crude oil. If you'll notice the red ABCD pattern that we have here, that pattern measured to 72.70. The high today is called 72.77. We're now trading a full handle under that at 71.45. Now, whether that means anything or not, I'm not sure. Let's try it again, Larry. At 72.45, it's only off about 40 pips. I'm sorry, but the number hit it exactly. Whether that means very much today or not, I'm not sure. But the fact that it hit it was really interesting to see what we're going. Well, while we're doing this, the heating oil had already topped a couple of days ago, and it's just making a 61% retracement back. So kind of watch that one. That'll be an interesting one to take a look at for sure. That's because we're at a very interesting spot here on the long-term charts here, for crude oil, and the whole world is bullish crude. So we'll watch that. Now, the $64 question, boys and girls, I had 3 emails about it last night. Is the bottom in gold and silver in? I don't know, and nobody else does either. But all I know is that it held at 1285 one more time, and as you can see here in the gold, we're now trading up around 1293.5. We took out the previous day's high of the last 4 days up at 1296. We haven't gone anywhere since that level, but if it's any good, it shouldn't take out the 1285 level. Here again, you're looking at a situation that we bought it at a really good price. You now have $1,000 profit in it, and I just don't think it would be very smart to let any of that go if you have it. So my suggestion would be, if you happen to be in the gold, put your stop at break even and then not worry about it, because now you have a risk-free trade, and that's really what you're trying to shoot for when you're watching some of these things. That's the main thing, is to keep that risk. I keep harping on it. In fact, if you ever come out to Tucson to visit me, one of the things that you'll comment about that most people do is when they see the car, they say, wow, the license plates say no risk. Well, there's a reason for that. Every single Fibonacci relationship or geometric number for Arizona has been taken. So I had to do something different. And my good friend Jimmy Elder, the second student that I ever trained 38 years ago, said, why don't you use no risk? He said, you're always harping about that. And I've had that license plate now for 24 years. Let's take a quick look here at Bitcoin, and then I'm going to go to a little bit of a different scenario here and talk about this was as of yesterday. Today we've sold off a little bit. We're trading down around 8,100. And it's still right at the 61% retracement. That is holding up well. But if we get below $7,800 per share in Bitcoin, that will mean that 61% retracement has broken, and we could be looking at something, more to the downside. I appreciate all the nice comments we got about Tim Boss yesterday about his new book about Bitcoin and astrology. I don't know too much about it, but he certainly seems to know what he's doing. And I think, if you have an interest in that kind of thing, you might want to contact Tim to see what it's about. Bill Meridian has a cameo appearance in there along with some other astrologers. Now, there's another ABCD pattern that I want to show you here from our good friends over in Boston, the old hockey players. And I wanted to show you, this is a chart of the corporate bonds, folks. It's a weekly chart, so it goes back a long ways. This is basically showing the bear market that we've had in corporate grade bonds. This means that we should be starting to get a rally in these corporate bonds. Now, I don't know what that's going to mean, but if that means it's going to rally, that means rates are going to drop. Now, that could continue to go down, of course, but this is a big ABCD pattern in corporate bonds. I have never traded corporate bonds. Well, 50 years ago I did with Memorex, but haven't since that time. But this is a ABCD pattern. There's no questions about it. It's perfectly symmetrical, and we're setting right at these levels. But you notice that we're very close to the old lows down there, going back 3 years ago. So it's going to be interesting if this holds up or not. But these patterns, you see them all across any asset classes. They're everywhere. They're just not just in that spot. They're everywhere that you look at these. So what we're watching, pay attention to it. I also wanted to bring to your attention the gasoline future, since we were talking about heating oil. Here again, we're seeing the same type of a pattern that is forming. You notice that we have this 3-drive pattern when we made a new high up here, up at that 1.27 level. So gasoline, heating oil, and crude oil are also in an area where they are possible making a top up in this area. And the interesting part about this, folks, it's not very wild up in here. I mean, you're not seeing any really wide-ranging bars. You're not seeing anything really crazy like we're seeing some of the other stuff, and that's it. Yes, Marshall, the corn does look, there's a possibility that we could get up there at that 427. Marshall, we're only 2 cents away, so you better stay close to your machine, because that's getting very, very close. We're also making some pretty interesting spots here in the soybeans also. So that's another reason, why we focused on that, because being in those things, you certainly don't want to take any losses on those. So just keep looking at them, because they, you want to protect yourself the best you can, because even the old blind hog picks up an acorn once in a while. And so keep an eye on those. Those are the one that's really interesting. Now, yesterday, I want to bring this to your attention. I can't update the chart here. Oh, shut the front door and raise your hand. I'm going to do that after the break. I want to talk a little bit about the transportation index, because it broke out above that 4 pattern. I'll post the chart we looked at yesterday, and this is the one from Friday. And I want to get it up here so you can take a look at it. But yesterday we took out those quadruple highs that we had here exactly at the 61% retracement. And when we get back from the break, I want to go over that because that's the same type of pattern that we could be looking at in the IWM, and also what we saw in platinum, where you have a false breakout, where it breaks out above that old resistance. It looks like it's going to go forever, but if it snaps back and goes below it, that's when problems arise. But we'll talk about that when we get back from the break, and we'll discuss what to look for as we see that. But the markets are still relatively strong this morning, and we're going to see how much they're going to be moving as we go through. The Nasdaq's not very far away. We're trading around 69.43. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted this chart of this Dow Jones Transportation. Don't trade it, just watch it. But we've had that quadruple top exactly at the 61% retracement, and quadruple means 4 times. And what we did on the 4th time here is we went popping through. If you look at it closely, you can see that there is a butterfly pattern there on the extension, whether that's going to mean anything or not. But just like that IWM that we talked about when it was trading at 161 150, it has to turn lower in order to make this as a false breakout. And we have not seen that in the IWM. The IWM is now 1.5 higher, another 1% higher than that old triple top that we had. So the program on that IWM was you could only sell it if we went back below 158, which was last week's low, and we never did that. So that doesn't allow you, any chance of getting into the thing. So that protects you from that particular scenario. So anyway, watch that very closely here in the transportations. By the weekend, we're certainly going to have an idea of whether this is a real breakout or, in fact, we're going to be looking at something that is going to turn down and go to the other side. We'll have to wait and see. Anyway, the Nasdaq has still been leading the pack up. The banking index certainly hasn't been, but the rest of it has certainly done that. But we'll watch that as we go through. The market is pretty strong today with the Nasdaq leading the way. When we hit this level here in the E-mini, it's going to be a lot of fireworks. They think at the let's see if we're going to hit that 2739 level. Yeah, we just made a new high. We just took that 2739 out by a point or so. I don't think that means very much up here, but that's just my 2 cents worth. And remember, 2 cents is what you pay for it. So there's nothing more than a big ABCD pattern up in there, folks. So pay attention to that, because we have one in the Dow Jones E-mini, and we also have one, if you take a look here, this is the New York Stock Exchange Index. We also have an ABCD pattern forming here, and this is an hourly chart going over the last 6 days. You can see the perfect ABCD pattern is up there, that it takes out the highs of the 14th, completing that. And whether that means much or not, we have to pay attention to it to see if it's going to do very much at all. Someone's asked me a question about cycles. Folks, I started studying cycles, long time ago, back in 1970, at the old Hearst stuff, and then I got along with Edwin Dewey and Gertrude Shirk at the Foundation for the Study of Cycles. My good friend and mentor, John Hill, took me under his wing in 1970, and we did a lot of stuff. And then during my years at Drexel with 20men, we started to get into astrology, and I did a lot of different things. And frankly, all you can do is come up with some really good educated guesses. In my opinion, I've never seen the Holy Grail. I don't expect to see it. You don't need it. In fact, like Mark Douglas always said, you don't even know what's going to happen next to make money. All you have to do is to protect your risk and get a probability of a trade working more than it loses. And that's the main thing. It's just like the same thing as when you play poker. You're not going to win every hand, and even if you have what you think is the best hand starting out, you don't always end up that way. So you have to be able to, change your strategy as you go through. That's why poker is a game of skill and not very much chance. There's some chance involved with it, of course, but there's a whole lot of skill too. It's knowing when to play, as old what's his name? Know when to hold him, know when to fold him. Jim, what was his name? What was that guy's name? I've seen him a million times with his gray hair. Shut the front door. Boy, these mental moments are coming. Kenny Rogers, he comes to Tucson every year, and sings that song along with the others. So that someone wants to tell this story how I met John Hill. I was in San Francisco in 1980. It was the spring, and we were at the Stanford Court Hotel, and they were giving a seminar on the Hearst program. It was called what was it called? Oh dear. Boy, this is really bad. Cyclotech, that's what it was called. It was called Cyclotech. And basically it was the principles of Hearst book put into a program, and then you would get these Cyclotech is what it was called. CompuServe is something to do with computers, but Cyclotech is what it was called. We used to get them special delivery on Saturday, and it would have all the cycles on the bottom, just like the ones we see every once in a while on the things that we look at. But anyway, that's where I met him, and for some reason he befriended me right away. We became good friends. We went out to dinner, and he introduced me to a whole bunch of people. And of course, Larry Williams was there, and I'd known Larry since 1965, so we were already friends, and John and Larry were friends, so we had a lot of fun. But anyway, that's how I met him, and then I would go back to Hendersonville, North Carolina to see him several times. He would come to California to visit me, and I still talk to him at least once a month see how he's doing. He's 93 now, still trading strong. And it's just amazing how well he's going. And that's really, and he's a really nice guy. He has Futures Truth, where he, really tries to tell it like it is, but super nice fellow. Anyway, we'll move on to some of these other things that you folks would like to. Folks, frankly, I've just been really blessed with all the people that I've met through the years, including the folks here at TFNN, the family, plus all the folks here that I've got to meet that, that are in the den and belong to the family. It's one of the real fun reasons to be in this business, because you meet so many great friends and it keeps you young. And this is a fun business when you're looking at some of that stuff. So it makes it real easy to see when you're doing some of these things. It makes, well, the NASDAQ is moving pretty good up here at 69.53. And the Dow Jones is moving too, so it looks like we're starting the day pretty good. And I think we probably took out that. Hold on one second here. I want to be able to get to one section. I want to double check that E-mini, because I'm pretty sure we got to take that out at, yes, we've taken it out. We're 27.41 now. And the ABCD structure on that, folks, let me just put this up here for you to take a quick look at it. I believe it comes in right about, how about 27.40 is where it comes in. So watch that ABCD pattern on the E-mini S&P around this 27.40. So it's going to be interesting to see if that, in fact, does hold. Oh, we got a caller from Miami. Dan, are you there?
Yeah, I am, Larry. Hi.
How are you? What can I do for you, my friend?
I got a nagging question about the gold futures contracts. The current month, obviously, is M, and it's rolling a couple of days to the next contract.
Yes.
The contract I'm trading, it's like the E-mini, is E-micro. It's like $1 for $10.
Sure.
Anyway, my question is, I can't seem to figure it out myself. The present M contract is the same price as the gold contract, and the next contract is like $7 or $6 higher. What happens if I was to get long the August contract? That would be the Q contract. That roll, would that $7 difference or so, would that revert back to the gold contract? This is something I can't figure out.
No. Basically, what you're doing is, because it's trading at a contango, in other words, the nearby futures are lower, all they're doing is rolling. The reason why that it's more is because of the fact that there's carrying charges involved with it, insurance. That's why. So it's really what you're trading is the pattern itself. So when you roll it from June over to August, it's no big deal. Just do it and then just treat it like it's regular gold. There's no difference, really.
So if I was to get along the Q contract like last week and hold it until next week, the price would not change? It would revert back to the gold contract price?
No. Stay with it. Stay with us, Dan, and I'll go through that with you. I'll stay with you, and I'll be with you in just a minute, okay? Okay, stay with me, please, yes.
The economy's coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're talking with Dan from Miami. Dan, are you still there?
Yep.
Okay, listen,
Yeah.
what you've done is you bought June, and what you're going to do, you bought June gold, and you're going to roll it over to August. Now, that's the next liquid contract. After August, it goes to October, and then to December. Each one of those will be a little bit higher because it's a futures contract. And what they do is they have these specifications that there's so much insurance and there's so much storage that cost to hold those contracts. And so that's how that works. I suggest you go to the CME website, www.cme, and they've got a little tutorial they'll walk you through that. But when you're rolling over from June to August, you're still long gold. You're just paying a premium. Because the futures contract for August, you've got all of July and almost in 3 weeks in August in order to use that. So they charge you those few dollars. So the move that you get will be the same. In other words, it'll be tick for tick versus the cash gold, but you pay a premium because you're in that futures market. You're not in a spot market. Dan, if you want to get away from that, trade the GLD. Just the gold. That's the ETF for gold, and that'll give you the same bangs for the bucks, and you won't have to worry about the rollovers or anything like that.
Okay.
Okay?
Well, I think I understand. Yeah. All right. Thank you.
I hope that helps. If you have any other questions, let us know, and I'll see if I can expand further. But go to that CME website. They'll give you a little tutorial on it that'll help a little bit.
Yeah, I will. Thanks.
You bet.
Bye.
Oh, okay, folks, I wanted to talk just a little bit about the gold here since I wanted to bring this pattern up in the platinum because that was the final thing that I was waiting for this past week. We got down and completed that 3 drive to a bottom pattern at the 877.9 level, $877 an ounce in platinum. Now we're trading at 903. That tells us that's pretty much had a pretty good completed pattern here. I believe this is just the start of it, but we haven't had much of a move. We've only rallied $12 off the bottom, and that's really not that much. So we'll watch that as we go through. So keep in mind, folks, that these are all based on probabilities. They're never based on certainty. If you want certainty, you're going to have to go into politics because that's about the only thing that I know of that is certain. It is always starts with a B and ends with an S. All right, let's take a look about the euro. We bottomed yesterday, 117.10. We rallied up to 118.20. We're now making a 61% retracement back on that. What's interesting is that the relationship short term between the futures and the gold and the euro has dissipated. In other words, the euro has backed off over $500 and gold has not. That's the first time in the past couple of weeks that we've not been able to see that. So watch that very, very closely, folks. It's going to be really interesting to see how that ends up as we go through, looking at some of these things as we look at some of these markets going through here. Now, one other market that we want to talk about, of course, is when we're talking about the grains and stuff. We've had a really good run in some of these markets, and what we want to be watching now is for some type of a correction coming. We posted that chart for the corn, and I just wanted to get this up here. So, have I lost it already? Yes, I have. Shut the front door and raise the rent. Anyway, go to your own corn chart and take a look at it. I've been sending them out through the evening, showing you the patterns that we're looking at in some of these things. So we're in an area where we should have a little bit of a situation where we have some profit take. We've already seen that in wheat. Wheat had almost a it did have a $2,000 move off of the new moon, and then it backed off, but it's still in a bullish mood. But when you make $2,000 in something, you certainly don't want to give much of that back. That's for sure. That's a real interesting thing. Let's put this wheat chart up so you can take a quick look at it here, because we sent this out in the middle of the night on Sunday when we were having all this stuff going on about the tariffs and stuff. And as you notice, when we came in for trading on Monday, the market was right at the 78% level, within a quarter of a cent, and then it just started drifting off, and we came all the way down and made a 50% level down there at the 543 level. And I still think we could back off a little bit more and then continue higher a little bit later, but that's still a little bit early in the game as we look at this. I want to remember again, folks, on Thursday we're going to have a cameo appearance by Norm Wensky to give us some key times, the specific astro times that we talked about last week that were spot on. He gave us 3 of them. One was the absolute high of the day in the stock indices, and then on Friday he'll have his regular report, because he's got some really big things coming up right after the Memorial Day holiday, which is Monday, I believe, is a holiday, so we will not be on the air. I hope I'm correct. Someone, keep my keep my feet to the fire on that one, folks, because it's really you want to be able to make sure we have the right holiday. But I believe the holiday is Monday for Memorial Day, and we got a caller, John from Philadelphia. Yes, sir. What can I do for you?
Hey, Larry. Good morning. I wanted to call in and ask if I could share with you and your audience just some ideas on the corn, soybean, and wheat markets that might be applicable right in here.
Please do.
First, I just have to give a hat tip and kudos to you on the utility of your pattern work, Larry. I will remember vividly multiple examples of corn, wheat, soybean, cotton prices moving significantly during the growing season, and you, in response, just sticking to your pattern work and finding spots where advances or declines have the potential to complete patterns and turn. And one that jumps to mind that I'll just share with your listeners right here is the corn market back in 2015. I know you were long corn futures, the new crop corn futures that year, right at this time frame going into Memorial Day. And then in the month of June, specifically late June of 2015, the corn futures rallied significantly, and what was going on at that time was flooding rains from essentially Houston, Dallas, up through St. Louis and through Peoria. There was just a weather system for about 4 weeks' time where it was just excessively wet. It wasn't a 100-year flood or anything, but it was excessively wet. And buyers in corn came in, drove up the price, thinking the flooding, the heavy rains would destroy some fraction of the crop. And the corn futures went, I think, right into July 4th weekend, or right about that time, right into a price of $4.40. I just can visualize the chart. And I recall the next week came in, you doing your show, you showed a chart, and I spoke with you privately where you announced to me you had booked gains on the D's corn futures at $4.40, book gains on longs, and you had shorted And interestingly enough, the corn futures plunged in the ensuing 2-3 weeks from 440 back under 4. And what was going on was there was essentially a weather scare on those heavy rains. And it was a scare only. It really didn't do much to, it didn't do actual crop destruction. So just wanted to paint that example for you and your audience.
Thanks a lot, John. We really appreciate it.
One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guaranteed trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to post this chart of Apple from one of our listeners over in the Rocky Mountain state of Colorado, because it's a real interesting chart here, because it's showing a really neat pennant, and as you can see here, that it's getting ready to break out either direction. Now, usually pennants break out in the direction of the longer-term trend, and that's what we have here in Apple. But if this should go the opposite way and we get below that 185 level, that would be a breakout to the downside. But it's gone sideways for quite some time. What's interesting, if you'll notice here, the beautiful ABCD pattern here on the bottom, when we got down to that 162 level, a few weeks ago, just spot on, a perfect ABCD, exactly at the actual number was actually 160.55. That was the low. That was the 1.27. And that completed the ABCD pattern. It had a 78% rally up at that 179.40. And then we completed it to the upside just now at 190.37. We're trading at 187 and change right now. So this is a very interesting pattern. The fact that it is not broken down and we've gone sideways is not a bearish phenomenon, folks. So Apple could easily break out to the upside. But this is a pennant, so we'll watch that. Keep a close eye on it because it's very interesting. You don't see those very often, but when you do, they're really quite interesting. But that ABCD at the bottom is the one that really makes it really interesting to watch. Yes, I'm seeing JCPenney trading at under $3 a share. Oh, poor old James Cash Penny. I imagine he's rolling over in his old little wooden bed, but who knows? Same thing with Sears. Look at JCPenney and Sears. Can you? And Monkey Ward's already gone. Oh my goodness, this is it's everything is Amazon now. Live every day in an attitude of gratitude, and may God bless.
The TFNN Memorial Day Tiger Dollar Special has just been announced. For 1 week only, we're doubling the bonuses that we normally give out with any Tiger Dollar purchase. Normally, when you purchase Tiger Dollars, you can receive a 10, 15, or 20% bonus with your purchase, but through Memorial Day only, we've doubled the bonuses to 20, 30, and even 40%. This is one of the best Tiger Dollar sales that we offer, and they only come around a couple times a year, so don't let it pass you by. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So whether you're already a subscriber and want to add savings to your monthly or yearly subscription, or you're thinking about signing up for anything in the future, now is a great time to get your Tiger Dollars. For all the details on the Memorial Day Tiger Dollar Special, visit the front page of TFNN.com before this deal ends May 28th.